Seems to be a great day for the stock market today, especially in the tech world, right? We can see the Q's up roughly 2.9% as I am recording. If you are a huge growth investor, we can see Shopify is up roughly 13% on the day. And today I actually want to take a closer look at two companies that deal in the advertisement space. And the giants, first we're going to take a closer look at Meta Platforms, which is up over 1.3%, and also Alphabet, also known as Google, up over 2.7% as I am recording today's episode. So today I want to take a closer look at some recent news affecting these two stocks, also some recent analyst price targets, and just my overall thoughts on both these companies. So let's get started.
I do want to thank The Motley Fool for sponsoring this video, and make sure to check out fool.com/Jose to get the top 10 stocks to buy right now.
So let's start off with some analyst price target changes. Today on October 4th, Bank of America Securities maintained a buy on Meta Platforms but lowered the price target to $196 from previous $218. If we just take a closer look, remember Meta Platforms is sitting at $140, so those are some great gains for those price targets. The same Bank of America Securities maintains the buy on Alphabet but lowered their price target to $114 from previous price target of $125. Remember, Google right now is sitting at about $101. So we can see Bank of America Securities is both bullish on Meta Platforms and Google, and I want to say so am I. These are two stocks that I own in my portfolio. Let me know in the comments below, do you have any of these two stocks, or are you planning on buying anytime soon? So now let's take a closer look at some recent news affecting both Meta Platforms and Google. I want to say most of the news is affecting Meta Platforms. There are some good and there are some bad. Let's start off with the bad one. First, this tweet from Oroso that he is hearing from multiple sources that Meta is re-signing intern offers, which offers were for 2023 start dates. So pretty much in this thread, he kind of goes on to say that, hey, because this is for interns for 2023, it does seem like Meta Platforms might have kind of a slow headcount increase in the upcoming quarters and even the beginning of 2023. And this is not something new. We have heard from Meta Platforms in previous earnings that one way they're trying to do to kind of save money is by freezing and slowing down hiring. Another tweet came from Bloomberg, which mentions that Meta is planning to close one of its offices in New York after scaling down its expansion plans in the city. The company will also freeze hiring and restructure some teams to trim expenses. So again, pretty much with what we saw in the previous tweet, and this is what we're seeing a lot in the tech market right now. Even Google, for example, they recently closed down their Stadia, which was their clouding platform. And here they mentioned how, for example, the Stadia team members will be carrying their work forward in other parts of the company. So pretty much that reorganization. So it's not just Meta Platforms. We are seeing other tech giants doing the same with either trimming down projects or kind of changing teams around. And if you are enjoying the episode so far, make sure to hit the thumbs up as it does help me grow my overall audience. If you want to support a little bit more, make sure to subscribe using my link at fool.com/Jose. Finally, if you want to learn more about the semiconductor market, make sure to check out my newsletter. The link is down below. Now I want to take a closer look. I want to say some bullish news for Meta Platforms and Google. First, we're going to see that Meta Platforms just recently announced post-loop ads on their Reels. So for those not familiar with Reels, this is Facebook or Meta Platforms short video content. They're trying to find ways to monetize this, and this is the way they're combating the kind of competition they're getting from TikTok. And obviously new ad solutions will do well for Facebook, as they have seen revenue decline. For example, in their most recent quarter, which they represented on July 27th of 2022, total revenue dropped about 1%, and they are expected a bit of revenue decline this upcoming quarter. But Facebook is focusing on two things. First, Reels, and second is artificial intelligence. And they are currently seeing positive trajectory with those platforms. So for them to be adding more advertisement solutions to Reels, I do believe is a very bullish case for Meta Platforms. Some other recent news for Meta Platforms is their push to artificial intelligence. Here on September 29th, they kind of show Make a Video, which is an AI system that generates video from text. Here they show some pretty cool examples of, hey, if you just type down some text, this is the videos that will actually come out with some artificial intelligence artists. I think that's pretty interesting and pretty cool to see. And I know many people believe Facebook is just an advertisement company and a media company, but I do want to say one of my favorite things about Meta Platforms is their engineering and technology growth. For example, they were one of the founders of PyTorch, which pretty much led to a huge evolution in AI database technology. And here they showcase another solution for machine learning. They do mention that in the AI market right now, AI users have very limited flexibility when choosing a high performance GPU. Right now, they can only choose AMD or NVIDIA. And the problem goes any further. Once they start developing in one platform, they pretty much are stuck with that platforms because the softwares don't really kind of the best way, they don't really kind of work well together. So Meta Platforms has actually developed this kind of open source technology where it makes it easier that, hey, if you develop on an NVIDIA GPU, but also have some AMD GPU servers that you want to work with, you don't have to start from scratch and you can kind of use pretty much the same kind of product behind it. So I don't know how much of a fan NVIDIA and AMD are for this, but I do believe the artificial intelligence community and the overall technology is going to see a nice improvements because of solutions like this. So I am pretty excited about Meta Platforms and their kind of engineering leaps that they are taking. There's not many news for YouTube right now. The only one I really saw was YouTube may limit 4K streaming to premium subscribers and they might show more ads. So obviously that's going to increase first the advertisement base for YouTube, right? More ads means more money for them. But now it seems like they're testing a feature that if you want to watch certain videos in 4K, you actually have to be a premium member. I want to say YouTube is really pushing, I guess, for this premium subscription. If they show you more ads, I guess more people are going to get annoyed and going to want to push into the premium market. Luckily, I'm already a premium subscriber, so I don't get hit with all these ads, but I wonder how many ads you guys got hit in this video alone. And before we end this video, I want to share my overall thoughts on Google and Meta Platforms. I do want to say I own both these stocks and I am super bullish. If we take a closer look at Y charts and look at forward PE ratio for both Alphabet and Meta Platforms, we can see forward PE ratio is actually much higher than current PE ratio. So right now, obviously because of the overall macroeconomics, analysts are expecting for companies to see a decline in earnings and their margins overall, which means that the forward PE ratio is much higher than the current PE ratio. Normally you see the opposite. At the end of the day, even the forward PE ratio for Meta Platforms and for Alphabet, in my opinion, are not far off from the lows of historical values. So for me, I do believe Meta Platforms and Google, or Alphabet, however you want to call it, are great buys for me in my portfolio, and I won't mind holding them in the long term of things. Obviously, many people might not like Meta Platforms because they believe this is a company that's only investing now in the metaverse, but that's not true, right? They are focusing so much money in artificial intelligence, which will help overall their advertisement solutions. So I do believe in the ad market, we might continue to see a form of headwinds due to numerous kind of events happening right now, but in the long term of things, I do believe Google and Meta Platforms will be great investments in my portfolio. I do believe though, if I was looking for a less risky, it would obviously have to be Alphabet because Meta Platform definitely has a lot more competition in the space and a lot more headwinds in my opinion. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you next time.